All right, weekend review, July 28th, 2025. So, U.S. equity markets posted another strong week with all major indexes finishing higher. The S&P 500 gained 1.47%. The Nasdaq climbed 1.02%, both setting new all-time highs. While the Dow Jones rose 1.28%, value stocks outperformed growth stocks, both Russells gaining 1.60% and 1.25% respectively. Now, healthcare led all sectors last week with a 3.5% gain, while consumer staples lagged and ended the week pretty flat. Now, year to date, however, the picture shifts. Healthcare is up just 0.1%, while industrials led the pack at 18.4% gain. On an economic front, reports on new and existing home sales came in below expectations, and elevated mortgage rates and high home prices continue to put pressure on the U.S. housing market. Let's talk upcoming economic releases. It will be a busy week for economic data, with key reports set to provide insight into GDP growth, interest rates, labor market, and inflation. The week kicks off Tuesday, July 29th, with the JOLTS report, JOLTS, which will shed light on job openings and overall labor demand. On Wednesday, July 30th, attention turns to the Federal Reserve as it concludes its two-day policy making and interest rate decision, because we've all been waiting for that one, right? The same day, the first estimate of Q2 U.S. GDP rate will come out, offering a snapshot of economic growth throughout the quarter. Then on Thursday, July 31st, the PCE report, one of the Fed's preferred inflation gauges, will provide further insight into the trajectory of inflation. Finally, the week wraps up on Friday, August 1st, with closely watched monthly jobs report offering a fresh view of the labor market's overall health. Now, market outlook. We're talking big picture. This week's one of the busiest weeks of earnings season, with 38% of the S&P 500 companies set to report. Among them are 4 of the Mag 7, companies that carry significant weight in the index and often set the tone for broader market sentiment. The expectations are high, and collectively, the Magnificent Seven are projected to post an average earning growth rate of roughly 14.1%, while the remainder of the S&P 500 is expected to grow earnings somewhere around 3.4%. On trade negotiations, we continue ahead of August 1st tariff deadline. Over the weekend, the U.S. and the European Union have reached a major agreement, with President Trump and European Commission President von der Leyen agreeing to a 15% rate on EU goods, half the 30% rate previously threatened by the United States. The U.S. and the EU together represent nearly 1/3 of the global trade. Additional agreements were also reached with the UK, Japan, Indonesia, the Philippines, and Vietnam. Now, we're going to close this out with stocks in the news. We got 2 of them. We got GOOG, which is Google. Alphabet reported strong quarterly results last week, driven by continued momentum in advertising and cloud businesses. The company also announced a $10 billion increase in full-year capital expenditures, bringing the total to $85 billion, largely to support its AI, artificial intelligence infrastructure build-out. The overall gain was 1.53% last week. And the next one is HON, or Honeywell. Honeywell posted an earnings beat and provided more details on its planned breakup into 3 separate companies. HON also raised its guidance for the year, not only based on core operations, but also based on an M&A activities and positive foreign exchange benefits, which failed to impress their investors. Shares fell 4.67% for the week. That's your market update. We'll see y'all next time.